Scott Sage, welcome to the Patrick Real Estate Show. I'm so excited to have you on, man. For the people that don't know Scott, I'll give you a little bit of background. He has a 170 unit property management company, and he has done 5 acquisitions in this space. Smaller companies, but rolled them up together to get to where he's at today and helped him scale a lot faster. Not only that, but he is super involved in the industry. I would consider him a good friend. We always catch up on the industry events, and it's always a good time. And he also is very involved with the customer experience and the marketing at AirDNA. So he has a lot of insight on even how he leveraged AirDNA and how he did everything with the acquisitions to grow his management company. But without further ado, welcome Scott to the show.
Patrick, great to be here. Yeah, you're right. Typically, we're catching up, having conversations over maybe a beer or two at Verma or one of these events. So now It only is right that we record this one.
Is this the only time we're talking sober, right? What is it, 9:15? For me, at least. No, all jokes. But yeah, Scott, I don't think I've even asked you this at any point, but how did you get into the space to begin with? What's your story there?
Totally on accident. And actually, that's not uncommon from a lot of people I talk to in this industry. But yeah, maybe all the way back. I was living in Indianapolis working at a little company called Eli Lilly, which actually just this week crossed $1 trillion in market cap, which is just bonkers. And my best friend and I bought a property together to live in. And we both traveled a lot for work. And we're like, let's throw this thing on Airbnb. This was back in early 2017. And in Indianapolis, there wasn't a lot of Airbnb action or supply at that point. And we rented and made money. And we were like, oh, this is fun. So we took some profits, we took some other savings and bought another property and did that as a true investment property. Over the next year and a half or so, we bought another. He became less interested. I became more interested. I started managing for some friends and family in the area. One thing led to another, realized it's a good business, and formalized my management company that is now today called Home Base. So there's some steps along the way we can dig into, but totally on accident, renting out the home I was actually living in and realized there's a business to be had here.
Let's take a step by step, right? So you started managing for other people. And so maybe explain how in 2017, what are the first few homes that you're managing? How did you grow? Can you walk us through a timeline?
So the very first home I managed that I did not own is still in our portfolio today, and it holds a special place in my heart. Indianapolis. What's the largest event in Indianapolis every year? The Indianapolis 500.
Yeah, Indy 500.
Have you ever been?
No, I haven't.
It's an absolute, they call it the spectacle. It is a total spectacle. Hundreds of thousands of people flock to the racetrack. Massive short-term rental event. And this property happens, its backyard literally is the racetrack. So this is like perfect for short-term rentals. They also have concerts there. They have other races there. So look, the property is nothing special. It's like a very classic Midwestern 3-bedroom home, but because of its location, we decked it out in short-term Indy 500 and racing design. It just absolutely crushed. And I had a ton of fun doing it. I think the other key element here that I always unprompted share as advice for early operators is early on, I did the cleanings. I did the supplies. I did the communications. I did not do the maintenance. Nobody wanted me to be their handyman. But I did every job, and what that trained me on is what it takes to be successful at delivering strong reviews, a good guest experience, and realize where my weak spots were. And so then as I scaled over time to where we are today, I also knew what to hire for and knew what good looked like at every job in the business. So that was the first one, and I got lucky because this individual, who was a mutual friend of one of our friends, also happened to be a realtor. And so a couple of his clients wanted to get into the short-term rental space. And so he referred me because of the good work I had done for him. And so that slowly over time, over the course of about 9 months, added about 5 doors that I was managing. And that's where I realized, okay, there's at the time it was just like a side hustle. Oh, I can make some extra money here. And then it quickly became a real business.
That's awesome, man. And so at what point did you get to where you realized that acquisition? Like, how did you fall into acquisitions? Like, how did you buy your first portfolio?
Yeah, so there's a big piece of the story I've left out so far, which is there also was a critical juncture in my life where I moved away from Indianapolis and went to business school in California. And
Oh, you were doing this while you were, so you went to, okay, so how old were you at this time? Sorry, I didn't even ask that.
yeah, so I was about 4 years out of undergrad.
Wow.
And at this point, when I left for business school, I had 4 properties that I owned and then was managing 6 others. So just crossed the double digits. And while at business school, met a friend and classmate who was also interested in real estate investing. And we were originally thinking, hey, we think there's opportunity. Now, keep in mind, this is also like the zero interest rate environment. We were like, we think there's opportunity to raise a fund to purchase and manage short-term rentals as like OpCo, PropCo model. A number of other operators out there have done that. To do that, we realized we needed to like more formalize and professionalize the management company. So that's where I converted it from Scott's side hustle to myself and my co-founder, Gabe. We formalized Homebase. So that's where Homebase B&B started. And in doing that, kind of just a multitude of things happened at once, Patrick. Another manager in Indianapolis approached me. She was ready to get out of the game. And she had 18 doors. And we reached an agreement and acquired her company.
Oh, hold on. You're going quick. So that 18 doors, how did you look at that acquisition? In my mind, right, you could always say, I can always do the sales route and get these homes instead of doing the acquisition. What prompted you to want to do an acquisition?
I think a few things. One, there's a very real answer, which is I was no longer in the market. And so just operationally it was far more complex for me to scale organically. And so we bought an existing operation. There was a local team in place above and beyond, just like I was basically operating with a single cleaner at that time. So that's point number one. Point number two is Gabe and I, we looked at the economics of this business. We actually had a thesis that short-term rental management was underserved in the Midwest. You're in Joshua Tree. There's a lot of professional operators in Joshua Tree, or if you look in 38, Florida, or Destin, right? That was not the case in the Midwest, especially back in 2021. And we thought it was highly fragmented. There were good and strong business fundamentals around it, just in terms of being able to create a profitable business for us. And we could buy at a healthy and fair multiple. And so all those things were true. And we said, yeah, let's take a shot. We want to grow this business. We think it's a good business. Again, at the time, we had this thesis that we were going to have a grow and scale a management company so that we could ultimately invest on top of it and own the assets. We've since walked away from that, primarily because we really liked the management business. But that was where the kind of underlying thesis and background came from.
Gotcha. And when you did that, right, the idea for you in the first acquisition was the collective is better off with the merger. So let me ask you about the existing homes that you had. Did those homes benefit from the acquisition? Like clients? Because a lot of times people are like, I don't want to do this because I feel like my clients are going to get hurt through this because I'm going to not be able to focus on those clients anymore. But you're saying that you brought in a lot more support in those clients. Yeah.
So I think there's 2 reasons why I think the collective benefits. And I can also make the case for why it doesn't, but I'll give you the reason why it does first. And I think the first is talent. So if you scale and have a larger portfolio, let's use my example. I went from 10 to close to 30, basically 10 to 30. Now I can basically be a real company and not just like Scott's side project. That gives me far more leverage to go out and hire a strong local manager, or get the pay better rates for cleaners, or get the best handyman and maintenance.
Vendors. Yeah.
Better rates for vendors, because now I have volume and I have some leverage. And that gets passed through to the owner. So if you were my original property owner at this Indianapolis Speedway, you gain benefit because now you have better cleaners in your home, you have better maintenance people in your home at a lower cost, assuming, which all that proved to be true, assuming you can execute that.
So there was a net benefit to it. I will say that was similar to when I bought my first management company. I had 5 units at the time that we owned, and I was self-managing. And eventually, with the collective, to be able to acquire a 15 unit or 16 unit or something like that portfolio, it was great because then we just were able to finally afford A's and
Totally.
everybody else to just support the operation. So we could finally get personnel, finally had leverage as well to get other things like deals and things like that. But I think the collective benefited. And then on top of that, the previous managers, we saw that we did 30% better on pricing than the previous managers were. And I started realizing that, and maybe I'm curious if you saw the same thing, but the you bringing in your skill set to an existing portfolio can sometimes really benefit that portfolio a lot, because without your help, they might be doing less in revenue, for example, or not being taken care of good enough because the owner is trying to do, for example, like the 30 units are like my bread and butter, right? The 20 to 30 units, we usually try to get those to roll up because 20 to 30 units, the person's doing everything. There's no way they can focus just on pricing or just on marketing because they're taking care of the home. They're going to, like Scott, like you were cleaning the house.
You've been there. No, I can distinctly remember the feeling and where I was. Like when you reach that breaking point, it's depending upon the size of the homes, it's somewhere between 20 to 30 properties where it is always constantly on your mind. It is a never-ending inflow of guest communication. Something's broken, a cleaning problem, damage,
Very reactive,
pricing is
right?
wrong. Yeah, it's like something has to change or it's going to break. And when you are able to get to that next level and actually have the scale where you can now go hire and deploy talent to execute or operate each of those functions, it calms you, or at least for me, it calmed me. It gave me more clarity and time to then focus on where the business needed to go in the future and going forward, as opposed to just, holy shit, I have to just survive today.
Yeah, like head above water, basically. At 30 units, I'm assuming you're still very involved in the business. Like you're still doing a lot, right? 30 unit count. I'm curious what unit counts, and this is another thing, what unit counts or about what unit counts do systems break and you have to reinvent yourself or redo certain things that you've noticed?
I think it's highly dependent on market and quality of the home. Kind of the next part of our story, by the way, was we did another acquisition of 20 units in Louisville, Kentucky. So pretty similar market to Indianapolis, event-driven, urban, mid-sized city. For us, where things really started to break with just myself and Gabe operating was at about that 30 unit clip. Since then, and like to fast forward, we moved into some other markets. Like one, for example, is the western coast of Michigan. And here we have like larger, high quality homes along the lakeshore. And if we had just us doing this with 30, it'd be a total nightmare. We wouldn't be in business very long. I think that number looks probably closer to 12 to 15.
Nice. So, cool. So so let's set the second acquisition, Louisville. How did that come about? And let me ask you because there's a lot of rhetoric around focusing on one market or a few markets. Would you do that differently if you were to go back? Were you happy I'm just curious, like, what's your idea about scaling in multiple areas versus focusing on one?
I think there is value. If I could go back and do it again, I would not have done as many acquisitions as quickly as we did, because we did 5 in about 18 months.
Wow.
And since then, we've taken our foot off the gas and actually really focused on operations and building an organic engine. So we can talk about that. But where the Louisville acquisition came from was we really wanted to just test our thesis and understand the landscape and the markets adjacent to Indianapolis. So we took that 30, we had by that point scaled it to about 45. And then we said, okay, let's look in adjacent markets. We looked in Ohio, we looked in Kentucky, we started looking in Michigan. Ultimately, this Louisville deal popped up. Really liked the owners of that business, formed a strong relationship, and I really think it was, honestly, Patrick, like a 4-month process in total. They were reaching that point themselves where they wanted the next chapter of their life.
Yeah.
And so timing worked. And reached a deal and took over those operations and still operating that portfolio in Louisville today.
That's awesome. Now, when you did that portfolio, how did you come across these deals? Like, let's talk about that.
Yeah, totally. I'll plug AirDNA. So AirDNA was a huge tool for us.
Yeah.
And at the time I was not at AirDNA. So I was not a employee then. I was just a customer. And we looked inside of AirDNA's database and first started at listings and wanted to understand at the listing level what the market performance was. So if I look at 2, 3, 4, 5 bedrooms, what are they earning? What are the top performers doing? What's the average doing? What do guest ratings look like? What kind of guests are coming to this market? So that I could build an understanding and a map of what kind of performance exists in Louisville, for example. So we did this for about 5 adjacent cities, Cincinnati, Columbus, etc. And we liked Louisville because it was similar to Indianapolis in terms of seasonality, in terms of inventory type, and in terms of surge events, like I talked about the Indy 500. And so then from there, we went and looked at different host profiles for concentration. We now have a different tool on the AirDNA platform that makes it super easy to go find managers.
Like that's how it's just because Scott, but I help people with some acquisitions. I've been brought in as a consultant and I help people find properties or property management companies to buy. A lot of times I tell them AirDNA has been an incredible tool for that. And you guys have been, especially the new stuff you guys have been doing. But anyways, you can go on.
Look, I think I have the best job. I think I have the best job in the world because I get to basically just help build and promote tools that I want and I use myself. But yeah, to fast forward, like we basically looked and said, okay, these are 10 to 15, and at the time they were like a mix of just individual hosts / some who actually had a name, had a website, etc. And so we just cold emailed them. And we send 15 emails, maybe we get 7 responses, maybe we actually talked to 4, and then we got 1 closed. So that wasn't the same conversion metrics in every market because after Louisville, we did this at like scale. So we hired a VA, we taught them the process, how to go look across and canvas the markets, build your list, build the cold email, like schedule meetings, etc. And then we would get on the phone. So it was a lot of hustle that now with tools and AI and data, it's a lot easier than even just 3 and 4 years ago.
Yeah, because sometimes you don't even know that there's a specific manager in your market because they're so small. It's like a 10, 12 unit. And it just looks like it could be, like it's hard to find that. It's not under a specific name. It's Joe and Jill, the name of the people. And so how do you know that's there? It's hard, right? You can't just Google property management companies because that's not, the only way that you can do it is if you have a scrape data tool that will allow you to pull all that information in.
Yeah. Look, AirDNA makes it so easy now because you can just basically filter your way through to performance or underperformance or revenue or rating. An
imagine
example
owner. Oh, sorry. Go on.
No, go ahead.
I was just gonna say, imagine like being able to filter by, like you said, like what the ratings look like. Let's say a 4.2 rating management company going in there and being the saving grace for that manager. Like that manager might be overwhelmed and you can come in and they can be part of the collective and you can get that up to 4.8 plus. And now these owners are making more money. The properties are taken better care of, right? It's not just, this is and the value add from that, right? Because if the owners are making more money, you're making more money too. So it's like a win-win situation. But anyways, yeah. I think
that's a great discussion point. Would you want to buy a management company, call it 25 units, 25 doors, that it's a 4.3 overall?
I personally would.
How would you underwrite that? Like, how would you underwrite that it's poor operations by the existing management team or like property quality?
Actually, yeah, that is a great question. So what I would do is I would go and look at the reviews. Now with AI, I feel like it could be a lot easier. I don't know if we could do something like that, but with AI, I would love to just look at the reviews for each house and really see where the comments come from. Are they making notes about the management? Or are they making notes? And it depends on what I'm trying to do, right? So if I'm going to a new market and I really care about the people, then I want to make sure that the people there are doing a really good job. So I really want to make sure that they're taking care of the homes because the people that I can always get new properties, right? But the people and the systems and operations are probably going to be more important. But if I'm looking to go into my existing market, if I see somebody that has low reviews and I see that the reason they have low reviews is because of their team, I'm okay with that because I know that I'm just going to take those homes under what I'm doing and everything that I have in place, and I know that our property operation is going to take care of the homes a lot better. You see what I mean?
Totally.
Depends, I guess. My recent acquisition, I haven't actually shot a podcast since this, but we just acquired a fourth management company in our market, and there's a guy that was running it, and his name was Andrew, and he's an incredible operator. And we thought in our head, like, oh my God, we should merge because I would love your level of talent to run our company, to get access to that kind of talent through a mergers and acquisition, M&A. So anyways, there's a lot of reasons to do it, but either, what do you care about? Inventory count?
Yeah.
The people? Or new market? It just depends, right? What do you think, Scott?
Yeah, I think it totally depends on what you're building out, what your thesis is. I think in an existing market, so let's say if I was in Indianapolis, I could get more comfortable acquiring a average rating of 4.2, so long as I could underwrite the quality of the properties. That I thought the quality of the properties weren't the problem, it was the management, because it's probably going to be my operations and process taking over, maybe new cleaners, whatever it may be. I would need to underwrite that in the diligence process. But if it's a quality of property problem, I don't want that portfolio.
That's
And
true.
I think actually as we matured over multiple acquisitions, we started paying more for and only wanting to target high quality portfolios. So like an example of what you were talking about actually, and the next story chronologically is we did find a single individual host who just had 11 listings in Asheville, North Carolina, and
Great
like
market.
a 495 across the portfolio.
Wow.
They were all like 492 to 5-star units, like just really good quality properties. Reached out. She was actually looking to move on to the next. Again, getting lucky here with timing. Maybe there's some latent dissatisfaction with some of these operators where when presented with the opportunity of transitioning away from this business, they're ready to do and reached a deal. And that's still been one of our best performing markets today.
Wow. Have you grown that market?
We have, not as quickly as we would like, honestly. I will say, bad timing on the deal. We closed 3 months before the hurricane.
Oh no.
So we had some natural attrition, which we get from the homeowners. So we've rebuilt beyond our initial unit count
Wow.
and now growing there. And we have a great salesperson in the market who's adding a few doors per month.
Amazing. So wait, so I've
Obviously,
actually
I can't foreshadow the hurricane.
you can't underwrite that. So I remember I was on a panel. I was moderating the panel. I should know his name. I literally forgot his name, but he was a legend. This guy, big operator, he bought a portfolio off the coast of Florida, I believe, or close to Florida. I shouldn't be talking out of my butt, but he acquired some portfolio that was in a hurricane zone, and it was like a 150 to 200 unit situation. It was like a big company, and the hurricane hit, and like the whole island got washed, and he lost. It was the stories that he told. He rebuilt it and eventually came out okay, but the stories that he told about how you can't really do due diligence for everything, you're always taking a risk, hit home for me. But you rebuilt, right? You said you bounced back from that.
Yeah, and I think this speaks to the quality of the operator in the market. The host there transitioned out, but she had an assistant ops leader down there. And I'm going to give Haley a shout out in case she ever listens to this. She's exceptional. She is absolutely exceptional.
Awesome.
And so she has held that ship steady, helped rebuild, has actually improved the reviews and ratings above even what it was. And so that is true 5-star operations. And so yes, we have continued to build in that market.
Cool, man.
I want to, can we actually stay on this topic for a second? Because you said this about the deal you just did, which is like a Rockstar Operator. What in your mind constitutes an A+ operator in our business?
Scott, I love this. I love when I bring on a guest and they're like, turn it on me. It's great. No, I love having this sneak peek into our discussion. Sorry, rephrase that question one more time.
You said the company you just acquired, you're keeping this person on. They're a Rockstar Operator or top A+ operator, let's call it.
Yeah.
What constitutes an A player operator in our space?
Okay, so first of all, he used to work. This is his resume. Andrew, he used to work, and hopefully he listens to this. I don't know if he will, but shout out to Andrew. I guess all of our people. He worked at number one company in our market, like way back in the day when it was like the top company. It was the first one to do management in our market. It was like an OG company, and he worked there in a leadership capacity, and he learned a lot, and then ended up leaving that company. And the company lost its glory days. It was doing a lot better at the time, and now more operators coming in and all that. But started his own company, and that company that he started had a 4.99 average rating. I walked his homes during the due diligence, not during the due diligence because I was trying to look at something, because we had meetings and we couldn't let our staff know that this was happening, or their staff. And so we would go to like different houses, and they were immaculate. Like even houses that you would think, oh, this is okay home, right? Like, why is it producing so well? And those homes were doing such great numbers because they were just so immaculate, and they were getting 5-star reviews every single time because he dialed it in. And in my head, when we were doing this acquisition, we wanted to acquire them at first, just flat out take them, because they approached us. And we said, yeah, sure. But we eventually realized that his business partner decided he doesn't want to do it anymore. But he actually wanted to be still in the space, but he was doing everything. He was doing the guest communication. He was going, because he had 30 units. So he was going to the houses. And so we told him, like, hey, listen, you don't have to do that anymore. You only focus on high-level stuff and operations. And for him, he was really excited about that. And I guess what constitutes a great operator is you have your ratings. You have what people say about you. So every person that we asked about that used to work at Homestead Modern and that worked under him has said amazingly incredible things about him. They've only said good things. And so like you just eventually start thinking, okay, a great operator can mobilize a team, right? So you need to be on people's good side, and you need to be able to do that. But also to your point in the beginning of this podcast, you need to be able to do every part of the role and every part of the space, right? Like he's done cleanings in emergencies. He's checked the houses. He earned the respect of our team so fast because they walked the same houses that I walked, and they were like, wow, we got some work to do. And not to say that we're horrible at what we do. It's just we had an A- and he has an A+, right? Like he just took that extra step to keep things are very detailed that was beyond something that we had, where we realized, wow, we have, I feel like this person can add a lot of value. Anyways, hopefully what do you think constitutes a great operator?
Yeah, I think what I've got landed on is 3 attributes, and
I love it.
You addressed it, which is basically the biggest one is ownership, like ownership and agency. I think you called it out around what you just said. If there's a missed clean or an emergency clean, this person's going to go do it, no questions asked. They don't need to be told. They just innately and inherently take ownership of their craft and of their portfolio and of their reviews. That's number one. And that's true at every level of the org, by the way. That doesn't have to be COO, CEO, or cleaner. That's true across all. Number 2 is a bias for action. And like, you can have ownership and care and have agency, but are you actually going to proactively do it? Are you going to find new ways and mechanisms and vehicles to make the business better? That's number 2. And then number 3 for us has been a will to win. Mm-hmm. And like the way we say win is we actually incentivize our entire team with incremental bonus upside based on review score. So every single review score is tied back to an ops manager or to a cleaner by category that we can measure. At the end of the quarter, half year, and full year, we are distributing bonuses based on that performance. And it's been so cool to see, like all the way down to the individual cleaner level in Slack being like, hey, actually, I think this this review was missed. Make sure that's in there. That's a 5. Or getting upset about a 4 that just had like great stay with no other commentary, and like calling the guest, hey, what could we have done better? Blah, blah, blah. Those 3 things, because we've seen both good and we've seen bad. If I can screen for those 3 things before I bring you into our team, I have a lot of confidence you're going to be a strong player for us.
Wow. I love that. I love how you had a 1, 2, 3. You're like dialed, like you've thought about this for sure. Have you taken on great teammates or operators through acquisitions, or is it just inventory? What's the thesis for you?
Yeah, we have. Like I mentioned, Haley in North Carolina. We also have a really strong team in Michigan. So that's one we haven't talked about yet, but we acquired a company in Michigan, which was actually a much more professional operation than any of the other deals we had done to date. So there was a team in place and we had strong operations there. And so in that case, we actually approached the first 90 days almost as a do no harm. Yes, we have our SOPs. We have our processes. We have our workflows and our way we do things. But first, this is performing well and operating. I don't want to harm the business. I want to learn the business and I want to learn what is going well and what can be improved for you, the internal teammate, you, the guest, and you, the homeowner. And that's how we spent the first 90 days, is just dissecting, understanding, learning, and absorbing so that we could then deploy 2 or 3 high value projects to improve the experience for each of those kind of stakeholders or functions.
Amazing. I love that. I love all sides. There's so many ways to skin a cat, right? There's so many ways to do acquisitions. What I like about your approach is most people it falls, it just happens. To be honest, for me, I just became known as a guy. People came to me and I got a lot of acquisitions in one market. What I love about you is you're a testament to the idea that you can reach out and be very intentional about the acquisitions, and it works. And I've done this with a couple mentees, people that I've taught on how to go out, and this is for instance, literally, I'm not just saying this, but just use AirDNA as a tool, for example, to find all the property managers in that market, and then from there export into a spreadsheet, then find the information, and then go to town. And the numbers are so high in conversions, especially if you do it right. They were just going after luxury, that's it. And we messaged 10 people, I believe 10, yeah, around 10. 5 responded, 2 to 3 looking at their books heavily. Nothing acquired yet. but I feel like that's still progress. Very high. The fact that you even got 3 people to show their books off of 10, that's 30%. 20, I think it was 2 or 3. Even though they wanted ridiculous asks.
Any private equity shop in America has taken that conversion rate.
Oh yeah, absolutely. But it's just a very targeted approach. It's very friendly, and it needs to add credibility and whatnot. But I want to ask you, Scott, doing this for so long, what was your way of reaching out? What kind of message did you have? Did you find their email? Walk us through maybe your strategy and how you came about doing that.
Yeah, so we would canvas, as I said, and build a list, and we did it by market. So let's take an example where we actually never got a deal done.
Oh, wait, and also, how did you choose the market? That's another one. I want that in there.
Yeah, so really when we were going heavy at this, which admittedly I have not been very actively involved in this process for a couple years since I've been focused on AirDNA as the primary thing, but I also think there's a learning there, which is you can build a process and have teammates do it. So that's what has happened as of late. But when I was really heavily involved in 2020, early 23, it was like we said, canvassing Airbnb and AirDNA, finding those operators, building out that list, and using Apollo and Rocket Reach and LinkedIn Navigator and these websites, and just emailing any email or contact information we could find for them. So that's how we got the information.
Okay.
In terms of what the outreach looked like, we iterated on this quite a bit, honestly. At first, we thought we needed to be a little coy. Hey, we're interested in learning, or we want to partner, blah, blah, blah. And that was ambiguous and honestly a little inauthentic and disingenuous. And where we landed and what was actually successful was just being very direct. I admire the business you've built. I'm interested in acquiring your company. Would you like to talk and learn more? There's more to it, but that's really what we're saying.
Yeah.
Most people will at least entertain or respond that. And then you can get on the phone, explain who you are, explain what you're doing, and explain why you're interested in their company. And you may mutually agree this isn't the right fit, or you want to go to the next step. But even if you agree that it's not a good fit, it's always still fun to talk to another operator and learn about them And by the way, this happened in the Michigan deal. It was like 24 months after our first conversation, this person came back around. So like, just because it is a no deal at that time doesn't mean it's dead. So if anybody's listening and they're like going through this and they're like, oh my gosh, I'm 0 for 100. No, you're not. I bet two of those will come back around in the coming months. So that was the process.
I love that because it's all timing, right? There's some people that maybe right now is not the right time, but down the line they get burned out. This business burns people out. Like it's not an easy business in a lot of ways. A lot of people don't know how to operate things. They're a one-man show, one-woman show, right? And it can be very straining to be on call 24/7, having owners reach out to you, vendors, like everyone needs to get paid. The amount of work that it takes at a smaller scale it's difficult, and so people burn out, unfortunately. Once you get to a bigger scale, you can have functions and people kind of ownership over their departments, and it becomes a lot easier to sustain and to actually have a life. But when some people just don't have a life, really. Not to discourage people from entering this stuff, but I think you have to be very intentional and build systems and operations around what you do. I think, and a lot of people don't. That's what I'm trying to say. But I love that. What I've realized, and Scott, this space has evolved a lot, and now what I'm seeing is, especially at my company level, I don't know if this is the same for you. Do you get a lot of emails, people asking if you're looking to sell? Because I get a ton of them. And so I'm curious, how do you stand out from the grain?
Or on the other side of it.
Or on the other side. Like, people are reaching all the time. I'm not ready. Like, I'm just getting started. What are you talking about? And I'm enjoying it. But what's interesting is, like, I think that once you get to a certain point, they're all the same. They're robotic. I don't know how your experience has been, but that it just seems, my partners and we're...
Yeah, totally.
I don't know.
You can tell if it's like some analyst who's just blasting off emails to any property manager they can find, or if it's like even worse, AI. Like, I probably had 1 or 2 of those. I'm just like, right to trash. Or you can tell if somebody genuinely cares. Like, they took the time, they looked at your business, they know something about your company, and they are genuinely interested. I will say more often than not, that's probably the case. The way I approach those is similar to you. I have no interest in selling this business right now. And frankly, I'm not building a business necessarily to be bought or to sell. I want to build a business that is so good that people are begging me to sell it, right? But I'm not in the interest of trying to build something that gets acquired for X or Y dollars. But this is a small industry, number one. And number two, maybe something changes down the line. Or maybe there is an opportunity in the future where I do want to explore that avenue. I think it's so important to maintain a good relationship and be very transparent. Hey, not interested right now. I'm happy to learn more about what you're offering or what you're interested in or how you might value the business. But I'll be clear up front that right now I'm loving what I'm doing. I want to continue growing. I'm not interested in selling, but let's learn from each other. And having been on the other side of the conversation, that's great to hear. It's like just somebody else in the industry, in the space, another operator you can learn from. Kind of like how you and I do, right? We learn from each other. We have these conversations. And if we were in a buy-sell relationship, it would make it all that more attractive to work together in the future.
Absolutely. And I think it depends, at least for me, it depends if they're looking at, if it's somebody, I don't know, just I've heard so many stories of Vacasa. I'm going to use Vacasa as an example. Buying companies in the past and them losing half the inventory and the clients not being taken care of. So it's tough. It's also, if the sell does happen, it has to be to the right person, without a doubt, because I care about my owners a lot. I mean, I care about my people a lot. And some acquisitions happen where I've seen offers on the table where they're like, half of your staff, we're going to have to let go because we don't need it. It's, to me, that doesn't fly because I care about my people a lot. I don't know. That's just my thing. Just like what's your girl in North Carolina?
Yeah, Haley. Yeah, and look, I think I also don't want to sit here and act like everything I've done is perfect and I have all the answers. I've made a ton of mistakes over these acquisitions, either in buying a portfolio that had 20% poor property quality, and that 20% took 80% of our team's time. That's a huge learning and lesson that we had. Or not doing enough diligence on the seller beforehand. We got into a very precarious situation post-close one time. Like, I won't go into all the details there, but there's a learning there in terms of really doing your homework, vetting the seller, vetting the operation, or not. Like to your last point, that's what kind of triggered the thought is like, I think maybe on our second or third deal, we were in this mindset of, yeah, we kind of know what we're doing. We have our operations, we have our processes, and we're like, okay, we're going to replace X, Y, and Z with our method. Little did we know, the homeowners had signed up for and really enjoyed this particular part of the cleaning operation and thought it added value to why they signed on. And it created a huge flurry of problems with our homeowners. And that was us just totally losing sight of what was most important, which ultimately at the end of the day is our homeowner clients. And so it's like, there's some scars, but those are learnings, and we improved in the next two deals. And so there are going to be mistakes made when you're doing this. Like you don't have full information when you acquire a company, but being able to learn and adapt on the fly has been something that I'm super grateful for. Gabe, my partner, has been an amazing partner that we can continue to weather that storm.
Awesome, man. I think that's a great way to tie this in a bow and this. So I want to get into the last three questions for you, Scott. And we do this for all our guests. One of them is going to be a special question just for you, hypothetical. And the first question is, what educational resource do you think contributed the most to your life success and what you do, or maybe it holds true in your heart?
Yeah, for me, I actually think it's not anything formal other than it's from my mom. She's the leader whom I admire most. She is innately curious, extremely empathetic, and she is the kind of individual that I want my team to think of me as their leader.
Wow. Dude, I have like literally goosebumps. That's crazy. I love that. Wow, man. If I meet your mom, I'm going to let her know that she talks so nicely about me. But
hopefully
okay,
she
cool.
listens to this.
And so special question for you. Let's think hypothetically. If you were to start from ground zero, you have you have nothing, like you have no management company. You have X amount of money to get started and want to potentially buy and acquire management companies. How would you do it today? And what would be the process?
I would probably run a play. So to be clear, you're saying I'm the exercise is to buy a company.
Yeah, or buy multiple, or build what you have today, but you can do it whatever way you want, right? It doesn't have to be exactly the same. Would you buy all in one market? Would you go in different markets? Which market would you choose? How would you choose that market? I'm curious, like what would your strategy be?
Yeah, I would go find a market where there is concentration of inventory, but not a concentration of professional operations. Just it's going to be highly competitive. I'll plug it again. I would use AirDNA because I can go actually look at where there are professional operators, where there are individual operators, and how the performance differs or compares across those two. So I can look at the supply spread and look at the distribution of professional versus individual. So that'd be one heuristic I would use. I would then also try to look at, from an inventory growth standpoint, how has that market been growing? So is it flat? Is it declining? Is it growing? I'd probably want to take a bet on a growing market. There's also a very real answer here, which is, am I in the market? I would probably want to be in the market to start out. Then as I look at the individual companies I would evaluate, I'd probably want something in the low teens, because that signals there's existing operations of some capacity. There's cleaners, maintenance, there's at least some team of people in place, but it's not so big that, I don't know how much capital you're giving me, Patrick, but it's something where I can build a footprint. I can build my operations, build and gain experience and reps.
What unit count?
What'd you say?
What unit count ideally would you look at? Where do you find
15.
the most opportunity?
Let's say 15.
15? Okay.
Yeah, 15. And I would want high quality. So like, maybe just to give a simple answer, I would err on the side of, or opt for 15 high quality, meaning highly rated, good homes. You can just tell a good home, good location, etc., as opposed to trying to go get 30 to 50 mid-tier properties. And that is a learning I've had over time, because that's actually been, as we've evolved from our original portfolio to the existing today, we've evolved more towards fewer, higher quality homes. So
fewer and higher quality, were you willing to pay premium for that?
Yes.
What is that usually? What do you think that would go for usually?
Look, I think I'd probably pay 1.5 to 2 turns more on the multiple for a higher quality home. if we're looking at an EBITDA or profit multiple.
Why is that?
Because there's an entrenched that signals two things. It signals the quality of the home I'm taking over. It's like I don't have to do the hard work of going to find those homes. So that's number one. And number two, it is usually an indicator of high quality operations. Maybe not always the case. They could be getting lucky, but typically that is true. And number three, it is also typically an indicator of less churn. So if there's a high quality home, high ratings, you're going to be making more money. There's this flywheel effect. The homeowner's likely to stay around longer if that's the case. And so that's critical when buying a company, is you have to factor and underwrite the potential churn risk.
Yeah, that's true. And with that in mind, it would also probably set a really good foundation to be able to use those as your brand, to be able to be like, hey, I'm a high level operator. I can take on more luxury homes and help you as well, kind of thing. Cool. That's great. And last question for you. What does the future hold for Scott?
We have some exciting new things coming in 2026. You can have me back on the podcast to announce these. Maybe I'll announce them here first
Nice.
for AirDNA. Ultimately, like I said, kind of midway through this, is like I'm having a ton of fun because I get to build for what I want to see. Hyper focused on bringing some exciting new tools and features to the market for property managers like us. And yeah, just continuing to do that, and then continuing to grow home base, which is growing on its own. We've got an awesome team over there. We have an awesome sales leader we hired recently. So Sarah's been crushing it and just making sure that she has what she needs to continue to bring doors into home base and new homeowners.
That's amazing. And for people that want to reach you, Scott, all forms, right? Let's say either they want to reach you and ask you some questions about the management, but also, honestly, why not? What if they want to have access to some of the tools that you use to help you scale and grow your management company? Like, how can they reach you?
Yeah, find me on LinkedIn, shoot me a message. If you're able to drop my email in the show notes, I can give it to you. It's scott.sage@airdna.co. Would love to hear from anybody in either AirDNA or Homebase or whatever you want to chat about.
Awesome. And it'd be really cool if you guys could just drop that you found out through the podcast, the Patrick Real Estate Show, Patrick's podcast. That'd be great. I'm just always curious how the audience reacts and what they like and what they don't, and it'd be good feedback from Scott too. But awesome, guys. Thank you so much, Scott, for jumping in here and sharing your story, man. Dude, it's truly incredible. Really excited about what the future holds just in general for you, the company, AirDNA, and everything going on. So without further ado, hopefully you have a good day, man.
Thanks for having me, Patrick.